Hello and welcome to another update video about Bitcoin as we're heading towards the end of another trading day. Not a very exciting one. Saturday is typically not too exciting, and my forecast for today, for Saturday, was consolidation, was the development of a fourth wave, a rally into micro resistance. That's also actually what we've seen. We're going to take a look at that on the smaller time frame. Wanted to start on the daily chart just to give you another idea also for new viewers, to get everybody up to speed. So idea is, wave 4 could have bottomed. So we have a wave 3 top in March, and then the idea is in the white count, we have an ABC structure to the downside, and the wave 4 could have indeed bottomed on the 5th of August. And because of that, this move that we currently see from the 5th of August low could be a 1-2 flat correction, wave 1 and then wave 2. So this is possible. It would need to hold 51,940 for that, and would need to give us some kind of evidence that a third wave to the upside has started. And we're very close to that 51.9k level. So we are pretty much where that move to the upside would need to start in a third wave. This is typically a good area to watch for a potential start of it, but it's not the preferred scenario because there's absolutely no evidence that this is actually unfolding. It is just important to know what are the key pivots, where could the bulls make a comeback, and they would need to do it before we break below 51,940. But at the moment, because of price action, as mentioned extensively in the last few videos, not only the last few, over the last couple of weeks, the yellow wave count is preferred in a W, X, Y structure. And then the Y wave is an A, B, C structure. And we're moving down in a C wave. Because of this move, I also see the bull market a little bit at risk for sure. But it will depend on how the market reacts here, down here to this pivot, to this area between 43 to 49k, with a specific target projection, measured move for wave C of Y of $45,670. That's the 100% extension of the circle A in yellow, and that's a key target for this wave C. And that means if it's the yellow count or the white count, both are possible interpretations of this wave 4. But the wave 4, if it breaks below the 5th of August low, probabilities for a bear market, they do increase, because we will, one bullish scenario is then formally invalidated. It is the scenario I'm watching for anyway, a move down to that area. I'm treating it as if we are in a downtrend, which we are, okay? And I'm not telling you we will turn around there, but if the market gives us a signal there, around 45,670. Well, that would be potentially bullish, because the market could form a fifth wave rally to new all-time highs from there. But I think it's important to understand that the market doesn't have to react to this area. Okay, that's why I'm warning. That's why I've been warning and said the risk for a bear market has increased. It's, it depends on how you want to see it. It's I'm treating it as a downtrend and simply will watch for a reaction. If there is no reaction, it's just that what's happening at the moment is just continuing. It's a downtrend, right? It's not guaranteed that we will see a reaction there. It's what I'm watching for, all right? And I would still prefer that. Who wouldn't? Okay, it's, but this doesn't mean it has to happen. So it's just the main risk area, or let's say the main risk level that I can give you on the daily chart is 43k. So we basically don't know if the bull market has failed until we break below 43k, because that's the key risk level. Now, as I mentioned in the last few weeks, everybody needs to decide for themselves if they are willing to accept the drawdown to that level to find out if we're in a bear market or not. Okay, that comes down to personal risk profile, portfolio management, and so on. But it could be a wave 4 until we break below that level. Very, very simple. And that's why the analysis is actually quite clear. The levels are very, very clear. But below that level, a more bearish interpretation, which we talked about, will be adopted. And it all depends on whether the bulls can avoid a break below 43k. Can the bulls turn up before we break below that level, regardless of which micro count is unfolding here? But the yellow count is currently preferred, which could send us down to around about 45,670. Now let's go to the, and that's the preferred scenario, right? Let's go to the shorter time frame chart. Quick reminder, you could vote on Twitter for coins for me to cover this weekend on Twitter. I just uploaded the dogs video. That was actually the winner. I will probably tomorrow upload a video about iOS only on Twitter, yeah? So if you're interested in one of these, check it out. It's uploaded, the dogs video now. You'll find a link to our Twitter account or profile in the description. There are also a lot of other updates, mindset stuff, lots of interesting content. So check it out if you're interested. Now let's go to the shorter time frame chart. And yeah, what can I say? We've reacted to the 50% fib level. Now, this is now the short-term chart, obviously. We've seen a decline. We talked about that extensively in the last update. I showed you this wave 2 high. We talked about further downside. I explained to you yesterday that the bears were likely exhausted, and that my view is that we are probably going to form a fourth wave on Saturday. This happened. And for me, this is a pretty clear ABC structure. Now, on the 30-minute chart, 15 or 30-minute charts, to analyze the wave structures, it is challenging. You get lots of distortions there. But a break above the 50% retracement in this wave count, it's tolerable, but it's a first warning. Okay, so it did break above 54,776, but it didn't sustain there. It was literally just you could say a wick, and we are moving down again. So it reacted to that 50% fib level, but we did actually get a close of the 1 hour candle above it. So it is a warning that maybe something more bullish is playing out. But for now, resistance did hold. Okay, resistance did hold. Yeah, I mean, what can I say? It's a 3-wave move up, so it's not bullish, but a larger 3-wave move could potentially unfold. I just want to mention that. So at the moment, there's no change to plan. Yeah, we rallied into resistance as the analysis suggested. We have a reaction to the 50% fib level. It did go a little high for a fourth wave. As I said, it's a bit of a warning, a hint that things could be changing, but not enough for me to change anything here, especially because this is not a 5-wave move up. Now on the way down, I mean, what could it be? It could be that yellow wave 5 has started and that this is a wave 1, a wave 2, a wave 3, a wave 4, a wave 5. Yeah, in yellow. This is possible. Possible, but the 1 is a bit short. So I don't believe that at this stage. To really follow through with this, the market would need to break below 53,080 and in a convincing way, because it could also just be a larger ABC structure like A, B, C. And this B wave is an A, B, C. That's the main purpose of this white support zone here. It's a Fibonacci zone. If this is a corrective pullback, then the market should react to this zone. Before breaking below 53,080, but ideally to one of these fib levels, 53,725 to 53,244, and then move up. So that's what we now need to watch for next. Could ideally go a little lower, but pay attention to these fib levels. If we break below them, then we are already in the next decline. And then this would be circle 3, which ideally would get to at least 51,555 before circle 4 starts. That's the update about Bitcoin. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.